Guys, it looks like I'm messed up a little bit there. I didn't add myself to the YouTube live thing like I was supposed to. That is my bad there. So I apologize for that. Golly, I was talking to myself the whole time until Dan said he's not seeing anything yet, which means you probably weren't hearing me talk it either. So you know what I'm going to do? I'm going to go back and we're going to start the sucker over here. Let me go back here. I apologize for that. That's probably why everybody left. I was like, geez, ain't nobody sticking around for this thing. But there's 2 people in here or there's 1,000 people in here. I'm going to still do it. Doesn't matter to me one way or the other. I like stocks. I like talking about it. So I apologize for that. But let's go ahead and we'll get going here. So pretty big day for the market here. We thought that with NVIDIA having an incredible earnings report that the NASDAQ 100 would just be soaring today, but it wasn't. It opened up strong and then it spent the rest of the day fading. And in a way that was just extremely dramatic. You had the NASDAQ 100 down 2.1% today. You had the S&P 500 and the Russell 2000 down 1.4%. And this is on a day where if you were just looking at what happened post earnings yesterday for NVIDIA, you were thinking the market's going to rally like mad tomorrow. It's going to build on the gains from yesterday. And we're going to be talking about the Qs re-challenging the recent highs of this year. But that wasn't the case. I actually had 3 positions that I came in today with that I was long on. I was playing the bounce, and I wasn't planning on holding them into Jackson Hole or not, but definitely the sell-off speeded that up some. I was long on QLD, which is a 2-to-1 inverse of the NASDAQ. I was long on the Amazon. I was playing the bounce off of the rising trend line there, and I was long on IWM. I just got into IWM a couple days ago. I sold IWM for like 0.5% total on the gain. I took like 1/3 off yesterday. I took 2/3 today. And then I sold Amazon for like a 1.8% profit, and I sold QLD for a 5.5% profit total. Very aggressive on the profit taking. When I started seeing that market slide a little bit too much there in the early going, I used that as my cue to go ahead and get out of the market. Glad that I did, because now I'm going into cash for the Jackson Hole event tomorrow. He's supposed to talk around 10:05 p.m. or 10:05 a.m. Eastern time. That could always change, or he could be late, but it's nice that we get it out of the way early on. We don't have to worry about it the rest of the day, but we should get a reaction pretty quickly. Now, you want to be careful in the sense that last year when he talked, everybody thought he was going to be dovish. Everybody thought he was going to goose the markets higher, and he pulled the rug on everybody. He came out, he looked mad, he looked angry, and he's a wrecking ball. He really is. He's like a bull in a china shop, or in some cases a bear in a china shop. He doesn't really give a flying rip about the overall market and what sometimes he can do to it. And so there is the chance that he could just completely tank this market, especially if he's wanting the market to start being more aggressive about pricing in future rate hikes. If he can scare the markets, you can almost get the market to do the job of the rate hikes without having to actually raise the rates. So tomorrow's a big event. We'll get it out of the way early on, and then I can potentially get short on the market. Now, if the market decides to rally off of it, that's always the possibility too. Then I have the flexibility to be able to go either way. But right now, I'm looking to position myself short going into tomorrow. Let's look at the charts, though, so that we can get right into it. On the Qs, you have this declining trend line. This goes back to the July highs. People were thinking with the NVIDIA earnings blowout, I mean, I think they came in at like 13 billion revenue, and people were only expecting 11, that was a huge amount anyways. Just even they got 11 billion. But people were thinking that we were probably going to break through this declining trend line here, and it was going to be off to the races back to the July highs. Nope, that did not happen. And look at this. This is a huge, huge bearish engulfing candle pattern. I think Nathaniel Ryan just mentioned it in the chat room. So he's ahead of me, man. He's got it figured it out. But in a couple, yeah, he's actually talking about a lot of the things that I'm going to be talking about here today. But you got this candle here. This was a good candle yesterday. It was a good bounce candle. A lot of people, especially with the NVIDIA earnings, thought that we were going to get a lot of good follow through today, and that didn't happen. But this bearish engulfing candle is essentially when you have the price opening above the previous day's candle, which is typically green, and then it sells off the whole day and it engulfs the entire candle bodies from the previous day. In this case, it could have like engulfed like 3 of these things. I mean, that is huge. I mean, you don't see that big of an engulfing candle pattern that often. I mean, that is textbook. I mean, if people will probably be referencing that candle pattern for years to come as the textbook version of a bearish engulfing candle pattern. So that's bad. We don't like that. But What we also have that's not the greatest thing for this market either is this massive neckline that's forming of this head and shoulders pattern. So you got the left shoulder, you got the head, and then you got the right shoulder. And it's very close to confirming. You get about another, less than 1% away from confirming this tomorrow. And it's happening a little bit faster than I thought it would. You also have a nice, this is turning into also a textbook head and shoulders pattern too, because you got a nice even left shoulder and right shoulder as well. And you get the head and shoulders pattern, for those who don't know, it's a silhouette of a human body. Again, like left shoulder right there, head, and then right shoulder. So like a silhouette for a human. And then you got this rising trend line. This goes back to the January lows right there. And you could see a test of this tomorrow. So that is not out of the realm of possibility that we get a test down to this like 350, 351 level. If that happens, then you could see a bounce off of that level. And you might be thinking that's a pretty steep drop. That's like 2.5%. And it is. But look at how much we've dropped from highs to lows today. That was a massive drop as well. So we want to keep that in mind. You also have this huge support level here to where if we do break this rising trend line, there's a good chance that we're going to be talking about testing this 317, 318 level before the end of the year. And that's the NASDAQ 100 analysis there. There's a lot going on. It doesn't look good. This is looking like an ugly topping pattern taking place. Now with SPY, similar stuff. You got this level of support going all the way across. And again, make sure that you're posting your questions and your charts that you want me to look at in the comments. I'm going to get to your questions. Make sure you're liking and subscribing as well, because that really does help me on these videos quite a bit. So I appreciate in advance you guys doing that for me. With SPY, you have the head and shoulders pattern as well. So left shoulder, again, we're talking about that human silhouette thing. Left shoulder, head, and right shoulder. You got declining resistance here that it tried to break through today. Look at that. Tried to break through it. Temporarily, we were trading above that resistance, but it was only for a few minutes, and then we just completely fell apart. Also, what we have here that we also have in the NASDAQ 100 is a massive bearish engulfing candle pattern. So that's pretty big as well. So we break this level here. Then what I'm looking for is a retest of this 417, 418 level going forward. So that is very much in the view of this market. You can see where this whole market could fall apart like a house of cards. Now, check this out. Rising trend line off the March lows. We tried to get back above it today. You had basically converging resistance overhead, rejected price on both fronts. Also worth noting is essentially a bear flag pattern that has formed on this market here in recent days. So check this out right there. And we'll create a parallel line, throw that right there. And yes, you get your bear flag confirmed. And now we're looking for this head and shoulders pattern to confirm to the downside. Now, IWM, what do we got here? IWM, you have the rising trend line that's been broken. Also, a bear flag pattern that has formed. Actually, more defined than what you saw on the SPY just then. Really nice. Also confirming. Don't really have as much of a good-looking head and shoulders pattern. You could make the case that it's a left shoulder, head, and you're trying to get a little bit of a right shoulder, but that's a tiny right shoulder. That's a dilapidated right shoulder right there. So I think what I'm more or less looking at is this as being a continuation pattern to the downside. You got some support at 180. If the bears are going to make something of this next leg lower, it needs to crush that 180 level and get back down to this March, May lows here. So again, IWM doesn't look that great either. Glad I'm out of everything, honestly. Okay, let's see the VIX. What we have here. Go ahead and throw up this slide right there. You can see it's been in a narrowing range. This goes back to 2021. Then we broke out of that narrowing range to the downside. Now, if I go ahead and just move that line out of the way for a little bit, you can see where this has been some heavy resistance of late, especially back on August 18th. We tested it and tested it again later on. Couldn't break through it. So now you're getting this big engulfing, bullish engulfing candle on the VIX, which is the opposite of the bearish engulfing candle. And it's setting up for a potential run back up here. And it was able to work off some of the overbought conditions. This one sets up for a nice move to the upside. And T2108, and then I'll go ahead and get to your questions here. But this is the stuff I wanted to cover with you guys first to keep you guys posted. T2108, this is the percentage of stocks trading above their 40-day moving average. It's sitting at 27% after today's move. getting close to being oversold. But what I really like from a long-term investment standpoint is when you can start getting some of these readings down into the single digits, man, you can add some good stocks usually at that level. So that's what I have to show. What do you guys have here? Boy, we've got some comments here, starting with Dan. And remember, some of these comments might have happened when I was just talking to myself without actually putting my my name up on the screen or my camera on the screen. All right, Dan says, Ryan, the market did the opposite of what was expected today with NVIDIA earnings blowout yesterday. I was expecting a rally. Boy, was I wrong. Yeah, and that goes back to oftentimes these big names. They take the wind out of the sail of this market. I sent out into the trading block today. I was telling everyone, I was like, be careful when you get these big name reports and everybody gets excited and you get this big after hours market push. You can oftentimes see a fade. The one that I see it the most with is with Apple. Apple will have huge blowout earnings, and the next day it'll hold up fine, but the rest of the market just falls apart, and it takes the wind out of everybody else's sails. He continues to say, my thought is this is nervousness about the recession and maybe about Jackson Hole tomorrow. I think there's a lot of nervousness about it. That's one of the reasons why I was being very aggressive this week, taking profits along the way with that bounce. I went into my trades and I said to myself, these are not going to be trades that I hold through Jackson Hole. Luckily, the plan worked out pretty well, and I was able to take some profits off it. I mean, I lost a little bit today off of those trades, but overall, the trades were fantastic for only holding them a week. Take a look at SWN and NOAA. Let's see what we got here. All right, so SWN, Southwestern Energy. So energy is usually hit or miss, with this market. You had this rising channel here. This is something that's concerning me with the energy trades right now. Is you had this rising channel. It was bouncing off of it at every turn, and then it tested it like four days out of 5, and then it finally broke to the downside. Tried to recover yesterday, but that's an ugly candle today, guys. Looking at SWN. Yeah, I mean, you can see where it kind of had that same rise in trend line for a while there, but it's broken it. Some support maybe right there-ish. I'm having a hard time on this one, guys. Maybe like a double top right there. First top, second top. I'll draw it for you. It's very back and forth, though. There's not likes to retrace every day of the previous day's movements. But for me, I'd probably say if it breaks back below the August 16th lows, which is around 630, you got to be careful, especially energy stocks below $10, very volatile. But yeah, I mean, back below 632, I would be very, very concerned there. Oh, we live, did I? No, you didn't. You're the reason why I realized I was just talking to myself and not putting my camera on. Not seeing anything. Oh, man. All right. All right, Nathaniel, you pointed out the Qs, Head and Shoulders as well. Good deal. With the yields this high, I think JP will pause the rest of the year, and I have SQQ calls. I mean, how can you not play this setup, though? So let's look at TNX here, because I think so one of the interesting things is that the odds of another rate hike in November has rapidly been increasing. In fact, you even saw odds of a rate hike in September increasing. I think it's gone from like 11% to 19%. Not enough to get too excited about. I think those odds are going to dramatically shift in one direction or the other after tomorrow. So that's something to keep an eye on. The odds for November rate hike, I think, sit at about 42% right now. So there's almost that break-even belief that the Fed still plans on to do one more rate hike before the end of the year. Hopefully, they'll keep raising the rates as long as it takes to break the inflation. They really need deflation. I don't think that they agree with me on that, but they need to get deflation sooner, pretty soon, because people ain't going to be able to afford to live. I would agree with you, Skyheart, if JP says anything that's not hawkish. He's only undoing all the rate hikes that he's already done, and he has a history of doing that, especially at those FOMC pressers. He will raise rates, and then he'll talk them down, and that is the most infuriating thing that I think he does. Tesla bear case scenario. Well, one of the things I try not to do is just give it from a specific viewpoint, because then that's kind of a biasness. But from whether or not to short it, rising trend line off of January lows. Yeah, it's got some resistance here, and these are levels that I've been watching anyways. This level here it ran right into it. 2 out of the last 3 days it's tested. It's not been able to break through it. So I think what you want to see is whether or not it can break the lows from Wednesday, and then does it retest this rising trend line? That would be around 208, 209, and then you want to be careful of whether or not there's a bounce there. If there's not a bounce, then that's where it can really start to fall apart really fast. More sell-off in September's. I mean, I think there's a very good chance of it. I think that September is historically a bad month for stocks as well. So there's not a lot of support underneath the Qs here until we get perhaps back down to a little bit more of a reasonable level here, you know, around this like 316, 317 level. Apple, I'll knock out some Apple here. Look at that candle. Holy cow. I still am blown away by the earnings on Apple, that we had a 7% drop in Apple and the NASDAQ actually rallied 0.5% during that time. That annoyed the heck out of me. I can't even begin to tell you how irritating that was. So, all right, with Apple, let's go to this chart here. There's not a lot of support, and that's an ongoing thing with a lot of these big tech stocks because they ran so hard and so fast throughout the beginning of this year. There's not a lot of support levels underneath. And if you look at something like NVIDIA, right, that has seen its share of pump and dumps, it crash and burns, whatever you want to call it, this 219 level all the way up to, you know, where it goes from like $45, $46 a share up to $350. It didn't form a lot of support until it, and when it pulled back to two support levels here. You had this one level right here, and then the rising trend line, the orange and the yellow lines. They provided support, but there was no support really until then. It just completely crashed and burned. I think the same thing could happen again in NVIDIA. I know that's not a popular opinion. It would not surprise me to see NVIDIA crash right back down to this trend line again at some point in the future. So going back to Apple, we were talking about how there's not a lot of support underneath. I think that there's a very legit chance that we see this thing catch up with this red declining support level here at 167. That continues to decrease each day. Auto tool experts, not a fan of Tesla either. I set it back to 205 in my opinion to start, potentially lower eventually. I mean, I think it's overvalued. I think NVIDIA is way overvalued. I didn't catch what the NVIDIA PE was today. So if somebody wants to go to Yahoo and post that really quick, that would be awesome. Just kind of curious what their PE ratio is after that earnings beat yesterday. Before it, I think it was like at 220 something. Crazy stuff. Ryan, I've been watching you for a long time. I like the way you do things. We are very similar, and I have tons of experience in mod roles, mostly in Discord. I'd love to help you out anyway for free. Thank you, man. I'll reach out to you. Shoot me an email, Ryan@shareplanner.com, man. I'd love to meet up with you. QSR. Let's check out some QSR. So that is what I'm noticing right out of the massive rising channel. This goes all the way back to 2022. Whew. Definitely oversold. I mean, you don't even need a stochastic to see that. I mean, that's just a hard pullback. Breaking back below that 200-day moving average today, that's not looking good either. I think on this one, you got some support that comes in line with this rising channel. I think what you got to do with this one is, if I'm playing this one, what I'm doing, I'm waiting for it to pull back to the 64 level here. Trying to catch it here as a falling knife. You may have some support. Let's see if that, yep, that could be some support right there. That a different color too. That's some heavy support at 68. At least it goes back to last year. Watch that level. If that doesn't hold, then 64 is probably the next level. Rebound play for Nikkei. Do you know who used to call Nike Nikkei? That comes from Back to the Future Part 3, where he goes back to the West and he's wearing Nike shoes, and the guy's like, "What kind of shoes is that? What are those Nikkei shoes?" In any case, decided to throw that out there. To this day, I still call him Nikkei just for kicks and giggles. Probably not the best thing to do with an audience, though, calling it Nikkei. So rising trend line. So by the way, I can't even say it right. Nike has not had a losing day in has not had a winning day in 11 days. So you have this continuation triangle pattern right here, broke to the downside, and it got really ugly really fast. I would look. I think it's due for a bounce here at some point. I don't think it's going to go straight down to 90 without some kind of a bounce in between. But I think ultimately it's coming back down to this rising trend line that goes all the way back to 2020. Let's look at it from a long-term standpoint, because I think the sell-off in this thing has been so extreme. You got to start looking at some long-term implications. I mean, yeah, I don't think 62 is on the horizon anytime soon, so I don't think that's worth pointing out. But I do think that a pullback to this 90 level is very possible. Disney, what's happening to Disney? They just live down the street from me here, about an hour or so. I never go there, man. Let me tell you, that place, especially in the summertime, you don't want to be there. So I think we need to adjust this chart a little bit, though. There we go. Essentially, what you have with Disney right now is a little bit of a meltdown taking place in the stock. Yeah, that's drawn right. So with that, you have this huge level of price level support. That's going to be coming in at about 84.40. It's broken now. It's at 82.40. So the next level of support becomes 46, 47. I don't think, again, like Nike, I don't think that's necessarily on the horizon for right now. You have rising trend line. Oh, look at that, though, guys. No, I did not mean to do that. There we go. So Disney, yeah, rising trend line right there off of from going back to 2009, but it hasn't been tested in a long time. So, I mean, years, maybe a decade, it hasn't been tested. So when we zoom in on this, what do we talk about? Yeah, it's breaking below that too. So maybe there's not a lot of support there, but it's maybe move that up a little bit. There we go. All right. Yeah, it's still broken, but I mean, I wanted to draw it accurately. So you got two things that are happening this week. You're breaking below this rising trend line that goes back to 09. And you've got this huge layer of support at 84 that's breaking. So that's probably something I don't want to be touching right now. Can it bounce in the short term? Absolutely. But you don't necessarily want to play that. Yeah, I think it's very possible that, you know, before the end of the year, you start to see like a 316, 317 level in the Qs. Holy cow. NVIDIA's got a 244 PE. Guys, that's so outrageous. It's absolutely absurd. I think people are essentially paying 8 times the amount for NVIDIA earnings as Apple earnings right now. That's nuts. ENPH. Okay, that was a weekly chart I was looking. So the weekly is also very concerning. Look, you got a price level support that's breaking down this week. So that's a big problem right there. On the daily, I mean, it doesn't get too much better. You got the rising trend line. You had this layer of support here that jump started the next leg lower. I don't see a reason to get bullish on the stock at this point in time. I think it's very oversold. So you may get like a temporary bounce or so. I mean, it's down 6.1% today. And going back just to July from 195 down to 122, that's pretty significant. Again, not surprised if there's a bounce in EMPH, but a lot of these solar names have been getting decimated of late. Let's look at the solar industry just in general, if I can pull it up. Let's see. Everything is solar on here. I know what you can do. Let's go to sector by year. Right here, technology, think, solar, 2480. All right, so let's go back and look up that. There we go. Check that out. So we're going to look at the industry chart on solar to get a better idea for what's going on here. Huge layer of support. This goes all the way back to September of 2020. Hasn't broken it yet. Getting very close to it right here. But overall, that's a massive rollover. This is a lot of volatility. I mean, huge amounts of volatility. Could see a dead cat bounce here come really soon off of this 245 level. That's not very far away. You're talking about 4%. And for solar, that's like a walk in the park. 244 before the last earnings beat. With the new earnings beat, it's now at 130, 113. Okay, that makes sense there. Yeah, because I mean they rapidly increase their earnings. Still, 113 is massive, especially in this climate. Heck no. Banks, SCHO will reload to the short side. Something is going to blow up. I think they're going to keep the rates high until something breaks. I mean, I think that's kind of the name of the game with the Fed. You got the pullback to support here. You got that gap that filled pretty well. Rising trend line, that's broken. Yeah, I would see whether or not this support level holds. So far, it has. Today wasn't a bad day for SCHW. You look at it, it's down 0.3%. What did the banks do? Banks were down 0.3%. So it wasn't a bad day for the financials at all. If you look at the overall sector, financials were lagging all the rest of the market in terms of weakness. It was the strongest of the bunch. Technology was down 2.3%, discretionary 2%. So the weakness wasn't so much in the financials as it was in like your more of your growth sectors. But yeah, watch this rising or the support level right here. If that fails, then there may be a next leg lower. What it would be ideal is if you could get a bear flag right here to form something like this. You know, if you're looking to short it, I would try to see if it can't form a bear flag. If it doesn't, I would probably just move on to the next trade. I don't like the idea of just trying to play this straight down to the downside after one day of a bounce. I thought the rotation was going into value utilities today, but end of day, bought some and CAG and but GIS. But look at HSY about to bottom out. We can look. Question is, where's the support on this thing? It's probably about where your support level sits. All right, let's get rid of some of these trend lines so we can clean this one up some. Yeah, I would probably. I'd say it's trading just below it. This is another one of those stocks that ran up really, really hard and fast. I've seen a lot of these too, where you had these little summits here from 2020. I think Tesla had it as well, and then it ultimately pulls back to these levels. Like I could see a move back down to 160 for HSY. At this level, I think it's a little bit elevated. It has dropped from 275 to 213, but we're talking about chocolate here. I don't know if it's worth that kind of a share price. All right, guys, good session with you all. Got off to a little bit of a bumpy start. I don't know if that's my age that's starting to fail me a little bit. 43, it's not old, but I feel like I'm forgetting things a lot more lately, and don't know why that is. But in any case, we're getting there. We're going to keep doing these things Tuesdays and Thursdays, see what the market does for us tomorrow with the Jackson Hole speech, and react accordingly. You don't have to force positions. Sometimes patience is the best method of trading, where you're just sitting on your hands and not doing anything because you may not know what to do. And that's fine. If there's times where you don't know what to do, you just don't do anything. So with that being said, make sure to check out swingtradingthestockmarket.com. Like and subscribe to this channel. Like the video, like all the videos if you can. Subscribe to the channel. Thank you guys. God bless.